So let's talk about how much you should save for taxes. Keep in mind that this answer will be different for every person based on your situation, based on how much money you make, if you have a spouse, how much money they make, and where in the country you are. So make sure you understand how income is taxed in the United States so that you can calculate exactly what percentage of your net income you should be saving. Now, while federal income taxes are the highest, there are often state and local taxes to consider too. Taxes are assessed on your total income as a couple if you're filing jointly, so your business isn't taxed separately from your W-2 income, and your spouse's rental income isn't taxed separately from your dividend income. All sources of income for an individual or married couple are combined, and then tax is assessed based on that total income and where you fall on the tax table. If you save 30% of your business's net income, which is your sales after expenses, that's usually enough to cover a significant portion of the federal taxes owed. But depending on where you live, there are likely some state and maybe even local taxes to consider as well. For example, if you're in Philly, you should save 3% for PA state income taxes and at least another 5% for Philly business taxes. So this is important. After you file your tax return, figure out what percentage of taxes you paid on your net income for that tax year. And once you determine what your percentage is, use that percentage as your guide as you save for taxes the next year. Remember that the amount you save should be different for every individual or couple, since you ultimately file your taxes together with your spouse. Mimic the mindset of W-2 employees that send money to the government every other week with every paycheck so that you don't spend money that isn't yours. Remember, W-2 employees make a lot more than what gets deposited into their bank accounts every other week. But that's because their employer is taking out taxes and paying those taxes to the taxing authorities on their behalf. So since your self-employment income doesn't get that same treatment, you need to save a decent percentage of your income so that you can pay your taxes. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.